So whether you're a parent, an entrepreneur, or just someone who wants more sovereignty over your money, this video is for you. So today we're diving into a topic that can change the way that you think about money forever. That's the infinite banking concept. We'll cover what it is, why it works, and how it can practically impact your cash flow, retirement, and your family's future. Hello, welcome back. If you're new here, my name is Kristen. I'm an authorized infinite banking practitioner, and I help Canadian families and business owners find peace in their financial lives and live the abundant lives that they were born to live by taking back control over their finances and redirecting more money back into their pockets. If you've ever felt like the hamster wheel of savings and tax concerns or uncertainty about whether your money's really working for you, you're in the right place. So why use infinite banking? Because it's the only financial approach I know that's designed to recover the cost of the things that you buy instead of watching that money vanish forever as interest and taxes. So when you follow the process, it recovers the interest, it recovers the principal, protects your capital, and it keeps your money compounding for the rest of your life without interruption. This isn't a quick hype or a feeling or a get-rich-quick scheme. It's a disciplined system that, when it's implemented correctly, reshapes how you access and reuse your money. So I want you to think about every purchase that you make in your life. You either give up interest that you could have earned by paying cash, or you're paying interest to someone else when you borrow money. Either way, you lose a piece of your money's potential. Infinite banking flips that model. It's as simple as changing where you store your money so that you can become your own banker. Think about it. You want to do exactly what the banks do with money. They use other people's money to capture interest and to capture cash flow. So when you save inside of a specially designed whole life insurance policy, you build guaranteed cash value. You can then leverage that cash value as collateral or borrow against it. You repay the loan back to yourself with interest that goes back into your policy and not to an outside bank. Your capital continues to compound inside the policy uninterrupted. In effect, you're creating your own bank, one that you control inside a system that's designed for long-term value, not quick credit card cycles or market speculation. So how does it really work? Well, the guaranteed cash value is a stable, predictable growth component that's protected by the policy's contract. You have guaranteed access to that cash through leverage. You can borrow against the cash value for purchases like cars, real estate, business equipment, investments, anything that you want. No one is hunting you down to ask for what that loan is for. When you pay it back, you're repaying it back to your own system. As you pay the loan, you're paying interest back into your own policy and not to an outside bank. So whether you borrow that cash or not, your policy continues to grow every single day. Your cash value is guaranteed to continue growing every single day for the rest of your life, whether you're borrowing against it or not. The key is you're not taking out your money. Your money stays inside the insurance contract where it's sheltered from tax, and it's going to continue growing. So why isn't everyone doing it? Well, there's several reasons that the population as a whole doesn't adopt infinite banking. First of all, most people don't think like bankers. Banks earn large returns lending money that they don't own, your money, by the way, that's deposited into the bank, and that's a model that's deeply embedded into our economy. But banks aren't teaching you the playbook. You've only been taught to deposit your cash there and take out loans from the bank and pay them for the privilege of using your own money. Think about where you're getting your information from. So most financial advisors aren't incentivized to promote things that allow you to not need them. Think about it. When you go to the bank is only going to advise you on products that they sell. There's nothing that's going to incentivize that advisor to make you take over that banking function, because then not only does the advisor not make money, but neither does the bank, and the advisor would likely get fired. Now think about government incentives. In Canada, we have RRSPs and tax strategies that often push people towards RRSPs and other registered tax plans. The structures can compete with or even complicate private planning, and governments don't benefit from you using your own banking system, especially when we start looking at the tax benefits that are involved. There's a ton of misinformation and complexity in this space. So There's procrastination and confusion and so much misinformation, especially online, that can make the concept seem really risky or unclear. And finally, we're always taught to focus on high returns instead of cash flow. People chase the biggest number in a statement, but they don't realize that there's a lot of risk associated with chasing that large number. If you have cash flow resilience and you can control your money over the long term, you come out ahead because you're not putting yourself at risk with those market fluctuations, the highs and lows. Ultimately, you want control over your money, and that's what's going to sustain your wealth over time. So for families who value control and sovereignty and a more prudent approach to money, infinite banking offers a way to reclaim the money that you earn and keep it working for you while you navigate uncertain times with even more security. So this approach appeals to people who want more time freedom and guaranteed cash flow. Someone who wants a plan that they're confident in with guaranteed aspects where it's possible. Someone who's looking for protection and growth of capital with more control over how that money is being used. And someone who's looking for a pathway to generational wealth and stewardship. You want to be able to look at this over a long time horizon. Again, not a get-rich-quick scheme. So let's look at an example together. Let's say that you were purchasing a car for about $36,000. We have two scenarios. One is going to come out the clear winner. So if we start by using a car loan with the dealership that offered you 8.99% for 72 months, so 6 years of payments. We're making payments of about $7,800 a year over the 6 years. If you're making those payments, your interest cost at the end of that loan would have been about $12,000. However, if you were to use your policy, take out a policy loan, again, not showing on your debt ratio, not showing on a credit report. This is a completely private and guaranteed loan that you have access to as a private policy owner. When you're taking out this loan, you're going to make the same payments back to your insurance policy that you would have made to the bank. That means that even though the insurance company is charging you less interest than what the dealership would have cost you, you are going to pay those same payments and you're going to recover that interest. Over the 6 years, your car would actually be paid off. The loan is paid off after 5 years, 1 year earlier. Your interest cost would be $4,000 less over those 6 years. And this is the important part. So your cash value would have grown about $40,000 over that same period of time, not including the money that you've already borrowed. So if your cash value started at about that $36,000 limit, your limit is now about $75,000 at the end of that loan. So after those 6 years, your cash value has increased. You've repaid more cash back into your system. And guess what? When you go to borrow your next car, now you have even more capital available that you can use to buy maybe the second car for your spouse, or one of your kids is needing to finance a vehicle at that point. I'm not talking about stealing cash from your bank. You always want to repay back your loans, and you always want to repay them at the same rate that you would have paid to that bank down the street, because every dollar that you put into your system is money that's going to be multiplied and brought back to your family over time. So what does it look like when you want to start one of these policies? Well, first you want to be clear about your goals. You want to know what you want your cash flow to look like. Is it debt elimination? Are you looking at retirement? Is legacy important to you? I want you to be very clear on where you want to be with all of these areas. Then you want to work with a qualified infinite banking practitioner to discuss a properly structured life insurance policy that's going to tailor to your specific needs. It's going to tailor to your cash flow, your age, your health, your goals. Then we want to commit to funding. This is so important. You want to be able to make regular premium payments that support this robust cash value. I can design these policies so that you have access to a lot of the deposits that you've put in almost immediately. But this is dependent on you still funding your system over time. You need to be disciplined in your savings. You want to treat policy loans as internal financing to yourself, just like you would to the bank. No one's going to call you asking for those payments. So it's very important that you're even more disciplined and that you're going to make those payments to yourself. I'm working on some tools to help my clients be able to track these loans and loan payments across a whole system of policies so that you can have all of this information in one place at the same time. If this is something you're interested in, drop a comment down below, let me know. Finally, we want to monitor and adjust. We want annual reviews between yourself and whether it's myself or another authorized practitioner. You want to have annual reviews with them to make sure that you're still operating in alignment with the life changes that you've seen over the last year, or goals that have changed, or things that have happened in your life that might have derailed your plan. We want to get you back on track. Maybe your goals have increased. Maybe you have more coming into your system and we need to look at making your system bigger. This is very, very important that we're doing these touch-ups on a regular basis. So I want you to start with a thought experiment. If you could borrow from your own policy for any purpose, what would you fund first? You want to use the infinite banking concept for recurring needs. Is it big purchases, for vehicle purchases? Is it business investments or education costs? What are the big cost items that you see on your time horizon that you are already saving for? This would be a great place to start because we can start looking with that as a goal in mind. We want to align with your family's values, and we want to plan around the stewardship and responsible use and preserving capital for future generations. As we're setting up these systems and we're involving the generations that are younger than us, we want to make sure that they understand how to steward this resource well, because they're given this gift of having their own system from a much younger age than you and I were when we learned. So let's talk about some common objections and myths that I hear all the time about the infinite banking concept. So the first one is that it's a get-rich-quick scheme. I know I have talked about this earlier in the video. It is not. This is a long-term cash flow strategy that uses permanent life insurance to preserve your capital. It's not a tax scheme. It's a tax shelter, yes, but it is not an illegal tax scheme or anything like that. Your cash within its policy remains tax sheltered as long as it stays inside that policy. There are ways that this can become taxable, and that's why it's important to work with someone who really understands the ins and outs, because even policy loans, if they're taken incorrectly, can trigger taxes, and it's important that the practitioner you're working with understands how this works. Second myth I get is that it's too slow to build cash value. This is not true. The reality is, yes, it takes time to build meaningful cash value. And in those early years, I'll say between years 5 and 7, you can't access more cash than you've put into your policy. It takes time. It takes time for that compounding to occur. However, I want you to consider where you're spending your money currently. Are you able to use any of that money and keep it growing? If you're able to access it, then that's something worth doing. Otherwise, I encourage you to look at the infinite banking concept, because we're not talking about locking away your cash for the rest of your life or until retirement or for 5 years into a GIC where then you can pull it out and you can use it for the thing that you're saving for. We're talking about having access to at least 50% of that cash right up front. And that to me is amazing. Final myth, it's only for high income people. This is absolutely false. The design is what matters, and it's scalable. So you can start with a smaller policy. In fact, a lot of clients that I have start really, really small. They have small monthly payments, somewhere between $100 to maybe $500 a month that they're putting into the savings plan. And they're using it on a really small scale because that's where they need to start. And as these clients get comfortable and as they start to build cash value in their system and they can start using it, that's when we see the system start to grow exponentially, because they're using it and because they are more comfortable and they're feeling better about how their cash is moving. So if you're a family who prioritizes sovereignty and faith and stewardship, infinite banking isn't just a financial tactic. It's a way to honor time and protect loved ones and steward your resources more intentionally. It aligns with values of autonomy and truth and continuous learning. And it supports a life of purpose where wealth is a tool for your family and your health and your service. It's not a status symbol. So finally, infinite banking isn't a magic pill. It's a disciplined process that, when it's designed and used properly, can help you increase your cash flow, help give you more retirement security, It can protect your inheritance, and it keeps more of the cash you earn in your pocket. Yes, it requires time and commitment, but so does everything meaningful in life. Time will pass anyway. Why not use that time to build a system that pays dividends, literally? So if you're ready to explore infinite banking as a tailored strategy for your family or your business, I encourage you to book a strategy session with me. We'll walk through your numbers and your goals and how a correctly designed policy could fit into your life. Thanks so much for joining. If you found this episode helpful, please give it a like and hit subscribe. When you're ready to take the next step, click the link in the description to access my free resources and book a call to start. Your future self will thank you. Until next time, live free.